Hello viewers, welcome to Forex Flow weekly analysis for the week of December 16th to 20th. I hope everyone had a wonderful trading week. Before we start, be sure to subscribe to my channel and leave your feedback in the comment section. Let's start with the first pair, Euro USD. Here on the screen you can see Euro went up all the way here to 112. That was the forecast given in last couple of weeks. Here we were saying that when the price bounced from here, we were saying that the price would go up in this manner and it can make a W pattern. But I've been talking about this double bottom here, and then we were saying that this is making a W pattern and there's a chance that the price would rise up from here. With this first huge candle, we were saying the price may dip a little bit and then it may make a W pattern like this, and that's exactly what we have seen here. Now here this was this huge candle, and the sell-off what we have seen here was a reaction to the election in UK, and this pair is also impacted with that. As we know, there was a soft stance from the US Federal Reserve as well about the interest rates, although they did not change the interest rates, but they are expecting that in the future. So with that, we have seen the euro went up. The concerns about the Brexit are also going to be addressed with the strong government in UK now. So this jump in the price was reaction to the election news, and then we have seen that it reached to 112 target. 112 has been a resistance in the past, so we were expecting the price to reach there and then retrace back, and that's what we have seen here on Friday. There was a lot of profit taken happen, but here I would not say that this is a trend reversal, although this is a very negative candle. Here you can see it's a huge inverted hammer and it's closed right below the previous candle, which was a doji candle here. So and the buyers and sellers were undecided. But here as well, if you consider this huge profit taken, then if you look at the line chart, we can see that this is actually really not a reversal, but it may have the next leg up, which can also go back up to here, back to this resistance area. Now for the coming week, what we have to look forward to is if the price dips down here, there is definitely a chance that the price will head backward, and then it may go back to this area around 110.70 to 110.75, all the way between this range to 111. If the price comes back here and you see it's making again green candles, this moving average is pushing the price upward, and you start seeing the trend is moving up, you can easily take a buy trade, and we'll again see the price would reach back up to here to 112. 112, it can go above that, and we'll talk about the trend change in the coming weeks. But for now, for this month or in the coming week, I would say look for this support area around 110.70 to 111. If the price gets support here, then you can easily take a buy trade and it will go up back up here to 112. With these moving averages, as you can see, 20-day moving average crossing 50-day, if that happens, then there will be a strong chance that the price will head upward again. With this support, if it breaks below that for some reason, then if the price breaks below these moving averages, that will send this pair back to 110, and then if it does not hold there, then back to 109. But the chances are very less likely. I think in the coming week, if there is not much activity, the price will go sideways. It may give you, the day traders, the chance to make about 40 to 50 pips either side. But if it breaks below that around 110.70, then you can easily enter into a sell trade and wait the price to go down here. That's about the Euro USD. Now here we're looking at pound USD. Here we were saying that the price was moving between this range, but last week I was telling traders to be very careful because with election it could go up or down 300 to 400 pips easily, and that's what we have seen here. The coming week there was a chance that the Conservative Party will win the election, and with that news there was a strong confidence in the government to handle Brexit. So that's what we have seen here. The price jumped from here and it went all the way up to 135. Now I have put this a line here because that's the area where we are expecting the price to go back again. But with this RSI, as you can see here, it's above 80 and it has gone several times above that. Even the weekly looks very strong bullish, so I would not try to short this pair. However, if it goes back up here, and around this area, around 134 to 135, if you see a sign of exhaustion or a huge red candle, then you can easily take a sell position. Our initial target would be here, the previous resistance, which is now going to act as support, which is sitting at 130, and it will get support here, and then the pair can go back up again. But I think at this point it's a little stretched and it needs some retracement. Also, if you look at the Fibonacci retracement, you will find out that the 61.8% retracement is currently sitting around 130 to 130.50. That's where we are expecting the price to come back. So that's for the coming week. Other than that, I would say stay away from shorting this pair, but look for an opportunity to enter into a buy trade around this support area. That's for pound USD. Now we are looking at Swiss franc. Here we were saying that the price had broken down here and it may go up to these moving averages. That's what we have seen here. It did a little bit bounce here, but with these moving averages coming down, we have seen a lot of selling pressure here. So the price had gone down here to the previous support level, which was at 0.98 to 0.9850, and here you can see these candles, and they have long shadows here downward, so that means there is a lot of buying pressure here. Also the RSI is very low right now, so you see these every time price goes down here to 0.98, 0.9825 area, it gets a lot of buying pressure and it goes back up here. So with that, in the coming week, what we have to look forward to is if it continues to do that, it's making another bearish flag, and then it may break down below this 0.98 area, and then it can go down here to 0.975. If it continues to get support and you see a strong green candle or a hammer, then the trend reversal is there and it can go back initially to 0.99. If it breaks above these moving averages, then it will go back to 0.9950. But I would say this market right now is not going in one direction. It's been going up and down here within this range of 0.9850 to 1.00, and it may continue to do that for a while. The year end coming and the holidays, I don't see much activity in the coming weeks. So if you see the price is not breaking below that, you can take a buy position here and wait for the price to go back up to here around this area 0.99. That's where the buyer should be taking their profit. That's for Swiss franc. Now here we are looking at USD CAD. Last week ended here with this huge green candle. That was the reaction to the US job report as well as the negative report from Canada about the job cut. So here we were saying that if the price is rejected from these moving averages, then you can take a sell position. If it breaks above that, then take a buy position. And that's what we have seen here. The next day on Monday, the price was rejected. And then this was the opportunity to enter into a sell trade. Here the traders were expecting the price to go down, and we had this 131.50 area of the previous support. That's where we were expecting the price to bounce, and this was our long-term sell target as well. Initially when I gave the signal here around 133 to enter into a sell trade, initially we were expecting the price to go down here to 131.50. It did not reach there. It was very close, maybe short of 10 pips, 15 pips. But with this job report, we have seen this jump in the price, and then it's again heading back to 131.50. Now in the coming week, if you see the price is breaking below that, then you can easily enter into a sell trade. If you're already holding a sell position, then you can lock your profit, extend your take profit targets, and then look for the price to go down initially to 131 with extension to 131.50. If it bounces from here and you see a strong green candle, then it can go back up to here, which is these moving averages catching up with it around 132 to 132.50. If it breaks above that, then we'll talk about that in the next week. But for now, you have to look forward to around this area. If you are holding a sell position, you can continue to hold it, lock your profit, wait for price to go down, break below this 131.50 area. If it bounces from here, then you can enter into a buy trade. That's where we are expecting the price to go up initially to 132 with extension to 132.50. Now we are looking at gold. Here we were saying that the price may go down here around 1450. It did not go there, but it did reach down here to 1458 level. As we know, there was a Federal Reserve decision about the interest rates. They did not cut interest rates further, and we have seen this huge volatility in gold and the sell-off, and the next day this buy. It's been very choppy. I don't know how many traders were able to catch up with it and make profit. But one thing is clear, that there is a huge buying pressure around this area between 1450 to 1460. Anytime price comes down here, we see a jump in it. If it goes up here, it's really hard to break above this area around 1490 to 1500 level. So it's been going up and down. I think it's good for day traders to make a trade between around this area 1450 to 1475. It's been going up and down. As long as the trend continues, for the long-term traders, I would say stay away from it unless and until you see a clear direction. For the coming week, I would say, as you can see, this green candle has closed above the 50-day moving average. Then there may be a further buying interest, and you see the price may go up here to 1490. So with this RSI going up and this green candle, you can take a buy position if you see the price is heading upward on Monday. But if you see the price is heading downward, then I would say stay away from this pair unless and until you see a clear direction. Now we are looking at WTI. Here we were saying that the price is struggling to break above that, but our forecast was if it breaks above 60, then it may go up to 62 to $63 a barrel. And that's what we can see in the coming week. And there is a strong buying pressure here every time price has come down here. And this is now the support area around 58 to 58.50 or 59. This is the area where you will find plenty of support. So if you see in the coming week the price is coming down here and it bounces from here, then it can go back up like this. So be careful, because it can be very quick. It can happen in the same day. The price can come down here and get support and go back immediately up to 60 and then break above that. If it breaks below that, then obviously you will have this support coming up from these moving averages, because in OPEC meeting last week we heard that there will be further cuts in the future. So with the 500,000 barrel cut, we are expecting the price to go upward. And in the coming week, if you see price go straight above from here or comes down here to this support and then bounce back up, both the scenarios are there. But our expectation is the price will be heading upward initially to 61.50 with extension to 62 to $63 a barrel. With that, I'm going to close. Thank you very much for watching. Be sure to subscribe to my channel and leave your feedback in the comment section. Thank you.